Charts. Good evening and welcome, everybody. This is the Thursday evening webinar. Tonight's topic is Know Your Market Conditions. So it's going to be a good one. Let's go ahead and knock the standard disclaimer out of the way so we can get over some charts. All communications provided for trading systems are for information purposes only. Trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody here does know that you do trade at your own sole discretion. All right, like I said, the topic tonight is Know Your Market Condition. So let's come over to an ES chart on screen 1. Let's kick the webinar off with this. So let's start by, let's go back to the open here and talk about the open. Or actually, you know what? I'm telling you, let's do it right here. Let's do it right here. All right, so pop quiz. Make sure everybody's awake in here before we get rolling on down the road. What does the two words market condition mean? I always do this. Is like the beginning of almost every webinar I do. This is like tradition for me. All right, now so fill this out. We're going to put market condition equals, and you're going to fill in this blank right here. What goes in this blank? Market condition equals what? What do we say? What does that even mean? Know your market condition. What does it mean? The market's sick? Needs to go to a market doctor? Or, you know, what does that mean? Market condition. What means what? And why is it so important to know it before you start trading? All right, we get some feedback coming here. Okay, Byron is saying up, down, sideways. Sal is saying trend. Raymond up, down, sideways. Quite a few. You up, down, sideways. David, Robert, James, and Dennis. Is the market trending in what direction, says Steve. Good. Hinting to where the market might be heading from John. Yes, yes. All right, so let's go. Let's broadly define it as, let's just go with trending or not. Okay, let's just leave it at that broad definition to start. And let's look at some market conditions. So I'm going to do this real easy. We're going to look at some lob me, give me ups in the beginning, and then as the webinar progresses, I'm going to get a little more, show more complicated situations. Let's not look at trade entry just for the moment. Let's just define market condition. In this area right here, from approximately 747-ish all the way over here to about 830-ish, what was the market condition? You can type in a U, D, or S. U for up, D for down, S for sideways. Now, for each of these questions, we're going to do a whole series of them real quick, okay? And you're only going to get 5 seconds to type a letter in. So you should look at this and instantly know what the market condition is. So U, D, or S. 4 seconds left. 3 seconds. Type in a U, D, or S. We're looking from here to here. Here to here. 1 second left. Type in a letter. Don't overthink it. All right, good. Time's up. Almost everybody in here, in fact, I think everybody in here typed in D for down. Perfect. So the characteristics of a downtrend are as follows. All you should know this by now, right? We have this notion of a thrust and retracement. Generally speaking, the background will be red, a thick, even red condition, not striped and not green, right? And then, of course, the way we trade a downtrending market is that we short retracements to resistance. So just a quick example of a trade here. Short, kissing the mid-band. Obviously, that's a short trade right there. Okay. Now, let's move over here to the right. How about between, let's say, I don't know, about 8:30-ish here, all the way up until over here, which is 9:30-ish, almost 10 o'clock. So about a good hour and a half. What is the market condition? 5 seconds on the clock, up, down, or sideways? From here, 5 seconds on the clock, 4 seconds left, to here, U, D, or S. Some good examples here of trending markets. And as you know now, they can turn on a dime now. I mean, those buy and sell programs, they kick in, and you got to get on the right side real quick, or you're going to be feeling some heat in a not a good way. Okay, 2 seconds on the clock. U, D, or S, up, down, or sideways. Yeah, everybody's got time's up. Everybody got that right. It's up. So characteristics of an up market are a green background predominantly, mainly blue bars, occasionally some yellow or even some red on a deep retracement. We're getting a higher highs and higher lows. All of the bands and the mid bands are stair-stepping up. By the way, for those of you new to us or visiting us this week, we are connected to a data feed to our broker, NinjaTrader. And this is a 4-range chart. We always trade 4-range. That's for many, many years now. We got away from time-based charts because they tend to skew the view of the market, what the market's really doing. 4's range is very consistent. And then, of course, you have the thick middle band. Many of our trades are made here. So there's 1, 2, 3, 4 bands below the mid band, the thick band in the middle here. 5, 6, 7, 8, 4 above it. Line 2, a lot of trades decisions made around line 2 and around line 6, and we'll talk about that in a little bit. Right now, we're just trying to get a sense of what markets are doing. So obviously, in an uptrend, we notice that we have this notion of thrust to the upside, turning the background green, giving us a whole slew of blue bars. And notice how all the bands, including the mid bands, stair-step up. Another characteristic of an uptrend. We get a retracement or a pullback, if you will, into support. And then right in here, you can see that there were some long trades set up with the minimum criteria, which we'll talk about in a little bit. Beautiful long trade here, pull back to support, holding the mid band, continued, thrust, retracement, thrust, etc., all the way up. And that's how you trade the uptrend. Good. All right, now let's bring up one that's not so clear. Okay, that was pretty easy stuff. Okay, that was pretty easy to see the up and the down trend there. Okay, let me give you one that's not so easy. Ready? Here we go. And by the way, ES does this a lot. So if you're going to trade ES, you got to be prepared for this condition that you're going to look at right here. 5 seconds on the clock. U, D, or S. Between approximately 7 o'clock Pacific. Yeah, there was a question, or is this Pacific or Central Time? So I'm here in California, so this is Pacific Time on my chart. When you're looking at Gary's charts in the room, he is in Oklahoma, so he is on Central Time. Thus, the difference in 2 hours between the two of us. Yeah, so Central when you're looking at Gary's charts, Pacific when you're looking at my charts. So here again, 3 seconds on the clock, U, D, or S, from about 7 o'clock-ish, all the way till 7:45, this area right here. Are we going up, down, or sideways? 2 seconds. Type in your view of the market condition in here. Time's almost up. 2 seconds. This area right here that I'm circling with my cursor in the middle of the chart, are we going up, down, or sideways? Just like that. 1 second. Get your answer in, your response. And time's up. Okay, good. Every single person in here got that tonight. Yes, this is sideways price action. Now, a common complaint, you know what? I need to do something real quick. Can you hold for like 20 seconds? Stand by. Just about 20 seconds. Okay, sorry about that. Okay, so going back to the sideways price action, I hear this all the time from traders, and the comment goes something like this. It's easy for you there, Mr. Charles, to, armchair quarterback this thing sitting all in your comfy chair at 5:30 on a Thursday afternoon to say, oh yeah, in retrospect, that was a big old sideways. How do you know when it's happening in real time? Well, let's go back and recreate 7 o'clock. And before I advance this chart, I'm going to ask a question. If you're going to determine whether you're in a range or not, what do we need to do? There's something we're going to need to do to this chart that will help us clearly see that we're in a range. And it's one thing we need to do. And it's what? Okay, let me go back to my little text box here. Okay, so this is really important here. So if we're going to identify sideways price action, and this is really important. This is really important. I mean, if anything that you learn about sideways price action, it was going to be fill in the blank. What goes in this blank here? What do you need to do? Okay, I'm just going to put do what. There's an important critical thing you can do that will immensely help you with this. And what is it? To quickly identify sideways price action, what do we do? Good. Draw lines. That's exactly what that is. We're going to draw lines at support and resistance, and let's do it. Let's do it together. Now, I'm going to slowly advance this chart beyond 7 o'clock. Now, granted, we've all we looked briefly at what happened, so we know kind of the result. But suspend disbelief for a moment and work with me here. When you think you should draw the first line for support or resistance, type in an L. Okay? And when you think it's time to put on the chart the second line, put in an L2. Okay? You ready for this? We're going to advance at 7 o'clock, pretending that we're recreating the market for a yes in real time from this morning, trying to identify if we're in a range. No, there's no L now. Just people are typing it out. No. In this exercise, let's advance it. There's going to be an L and an L2. You don't have to say it's support or resistance. You don't have to diagnose all the manner of things on the chart. When you think you see level 1 to put a line, type in an L. When you see level 2, type in an L2. We're going to do it together. Here we go. Okay, now we're at 7:03. $7:05. 717. Remember, whenever you think you have sufficient evidence to put your support and resistance lines on the chart, you type in an L and then an L2. Now, if you think you see both, go ahead and type them both in at this point. 718. 726. Remember, we're identifying, we're putting lines in here to help us clearly see a range. Everybody sees it now. Almost done. 730. 741. All right, and then we go into the downtrend. So time's up. 752. All right, now let's go back and recreate this, and let me give the team some feedback as to what came in here and how you can do things to help yourself be a little quicker to the range-bound party, if you will. Now, I distinctly remember this range because I traded it, and I remember calling the levels out. And everybody remember that? Between about 7 and 730, I said you're in a big old range with support between 46 and 48 and resistance up there around 56, 58. It's 40 ticks. It is very tradable. Anybody remember that from the live room this morning? Remember? Remember those numbers? Does that sound familiar? Good, because I said it in real time. And here's what I did. Many of you said to type in the first line right here, and that was good. Yes. I saw the L's coming in as soon as it rolled over. That's how you tell what a swing is, right? Everybody says, well, what's a swing? What are you talking about, swing? Well, a swing is when a market comes back up in terms of a push to the upside, hits a resistance level. Sometimes it's predefined from another level, a previous level. And other times it's not. And then support is, of course, where a market comes down and reverses at a support level. Now, it's important to keep in mind, and I've said this 1,000 times in all the webinars I do, to remember that a support or resistance line is simply a level. Okay, it's not, everybody wants to have a line. Everybody wants a line. Gary puts lines on the charts, which is extremely helpful in the room. And sometimes they're spot on, sometimes they're a little off. But the concept is that you have an area of support or resistance, an area. In other words, you know, the support area is right here. Now, we'll put a line and say, okay, support's at 46 3/4. But that's why I said in the room, you can clearly see support's down around 46, 48, and resistance is up around 56, 58. What I was talking about was the fact that there are times when a market will, and here's one thing I'm going to say for all of you that want to quickly identify range-bound situations. Sometimes, let me advance the chart and I'll explain a little better what I'm talking about. Now, at this point right here, see, sometimes what markets are going to do is they're going to adjust themselves a little bit. Clearly, you can see that there was a swing here, a swing here, and a swing here. Now, generally speaking, you're going to need at least 2 to 3 swing points to start getting your lines in. So the earliest you could have done the lines was right in here. Right when this popped up here, you had this swing, and then you established this swing right around 7:05. You could have popped some lines in. Now, let me ask a follow-up question. This is a yes or no question. Did the range change over time? This range that we drew here, did it change over time? Over the span of the next half an hour? Is there anything different between the price action here and the price action here? Yes or no? Just a yes or no. Type in a Y or an N. Does this look different over here than it did here? Yeah. It's a higher range. Exactly. Exactly. It's a higher range. So the range adjusted itself from where initially, for those of you early adopters who drew lines here and here to identify your range, it adjusted slightly up to where now 49 3/4, 49 is holding, not 46 or 48, is a higher low and higher high. Granted, it's still sideways, but in a higher area. When you notice this, and the way you would know it is that when you push up and get this isn't a trend change here. You're still in a range. Okay, you're still in a range, just to be clear about that. Other things that visually help you in range-bound sideways situations is that you get the striped shirt effect. Remember that comment in the room? That's a really nice striped shirt you got on there. You know, contrast that with over here when you had a sell-off and it was all red, all down, all down, all down. Sell programs, shorting rollovers, et cetera, et cetera. Excuse me. Here you don't get that. Okay, you're not going to get a solid green. You're not going to get a solid red. This is going to be like a big old striped shirt. You're also getting a series of highs and lows. Predictors can help with that too. Look at all the predictors going sideways. See them? Now, okay, so we've clearly identified the range here. So what is the size of the range that we can trade? Minimum size of acceptability for range trading. We have a number. What is it? Right, 20 to 25 ticks. So does this meet the criteria? Well, let's take a look and measure it real quick. Let's say resistance for the sake of a round number is around 58, and support right now is down around 49-ish. So that's 9 times 4 is 36. In fact, I recall saying in the room it was like 35, 40 ticks. Yeah, this is between 30 and 35 ticks. 40 ticks. Very tradable range here. Let's look at a range that isn't so tradable. I'll do that later. Let's finish up our thinking on here. We'll look at ranges that aren't tradable, but this was very tradable. Okay, now final question, then we're going to move on in regards to this range. Your primary mode of entry in this range would be what? L for long from the bottom, and you're taking profits at the top of the range, so that's an L. Long only, profits at the top. S, your primary mode is that you're shorting resistance. Every time you come up here, you short it, you cover. You short it, you cover. You short it, you cover. Short it, you cover. Short it, you cover. That's short. S as your primary mode of entry on this particular range on ES. You get to cast your vote on how you would have traded this. L for long. You're taking longs only. You're not shorting the top. You're taking profits at the top of the range. So what is your approach to this range, which we've already clearly identified that is tradable? 30, 35, 40 ticks, very tradable range. And then you could type in a B for both. A B for both means that when it comes up here, you short it. When it comes down here, you cover your short, you get long. Comes up here, you take profits on your long, you flip, you get short, etc., 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 etc. Rinse, repeat, rinse, repeat, rinse, repeat. That would be a both vote, a B. What say you, team? Looking back on this now, if you were trading ES or another instrument that looked like this, are you getting long from the bottom? Are you getting short from the top? Or are you trading both sides of the range? We'll give you 4 seconds. L, S, or B? By the way, as a side note, and most of you know this, of course, some of you might not know this, is that this situation here in a range that you see exactly like this is one of the main reasons that Object Trader was originally built. Now, over time, it morphed into range boxes, but our original concept, and some of you know this, some might not know this, a few years ago, our idea would be that we would draw a big box around here and then configure Object Trader to take the shorts and take the longs with that whole touch plus minus and all that sort of stuff. That was the original concept of Object Trader when we first started to build it. was to handle ranges like this, an easy, simple box way. But what we learned over time was that the box could be turned into all kinds of different things, right? Tight little boxes at support area, tight boxes at resistance areas, the mid-band boxes, of course, we teach those quite a bit. So it morphed into something more than that. Now, in this case here, if you were in a, and I'm going to try to find this. If you were in a condition, as an example, where you were coming off of a very big sell-off, okay, and the market remained weak and continued to do a pattern like this in a lower range with a lot of red bars and resistance holding here, coming off of a sell-off or a downtrend, in that case you would short only. That would be an S, right? Conversely, if you were coming off a big uptrend move, and then you started to consolidate sideways like this, that would be long only, right? Because you're convinced, you are of the belief that that there could possibly be, in the uptrend case, trend continuation to the upside. So in fact, you're buying long here. Given the size of this, I would say that this is an example, a good example of both. You could have traded both. Okay, made money on the long side. You could have clearly made money on the short side. You're coming off a downtrend over here. So clearly there's a good case for the shorts, which eventually worked out because you can see over here we did get trend continuation to the downside, right? So where the buyers would have lost is if you tried to get long again down here. Now, there was a couple of cases where the long didn't work its way back up. So for those of you who are trading both sides, you went ahead, you got long here, you flipped it and took the short at the top of the range, yes? And now you're short. Perhaps you got long again here. Now, the way to protect yourself against getting whacked on a big sell-off is you put a stop on it and you don't get long again, because now you had a small series of lower highs and now you're starting to get lower lows. And so the long end ended here. Sometimes that's an issue, and that's why it's important to follow that. Everybody's like, well, why is that so important? Why are you spending so much time on how to trade a range? Well, because range, in ES particular, ranges come along a lot. So if you don't have sideways range-bound trading in your repertoire, you're going to miss out on a lot of moves. You would have just sat on your hands for almost an hour here this morning on ES, when in fact there was good money here. There's very good money here, scalping this range, and I scalped it. I just happened to trade the long side in particular. I was more comfortable with that than shorting, and then eventually I stopped out and took the short when it kissed and rolled right there. So, good. Any questions on that? Yeah, I hear you, Robert. Okay, quick show of hands. How many you like ranges? How many you dislike ranges? Just put an L if you like them, DL if you don't like them. How many of you like ranges? How many of you just hate them? Do you dislike them? It could be ranges on anything. Russell, crude oil, gold, whatever you're trading. Just any kind of sideways range condition. Do you like them or don't like them? Oh, a lot of D's. I kind of expected that. Here's what I'm going to suggest, okay? For those of you who dislike ranges, I'm going to make a suggestion to you, okay? I'm going to make a suggestion. Here's what it is. A lot of it has to do with what instrument you're trading. Like, for instance, the ranges on a Russell are a lot different than ranges on ES, right? Ranges on gold and crude oil are different than ranges on ES. What I like about ES is that it has a lot of times, not all the time, but most of the times, it has respect when it gets into an identified range. Within a handful of ticks, it will generally respect that support and resistance level for some period of time. Whereas if you go into some other instruments, like YM was notorious for this, right? It's hard to trade the range. Let's say, for instance, you're trading the short side, and YM gets a huge spike up way into here and then flips, and you're looking to short, you get short and it flips and it goes way up here and then it spikes way down like that, not respecting any levels at all. It's hard to see the level in the first place. This is an instrument, if you're experiencing all the stop outs and that kind of thing, then I would not continue to trade range bound on that particular instrument. ES, though, is very tradable in most ranges. I hate ranges. I'm not a fan, but I got to learn it, says Byron. Rope around my neck on a three-legged stool. Okay, Robert, we get the picture. Couple of L's, couple of only dislikes. I would say try ES, try another instrument or two, try to get the side, try to get a little bit of range trading in your trader tool belt there, and you're going to find that sometimes those ranges can make you very good money. You know, as much money as trending markets. More feedback here. Cross says, James G says, I lose money within ranges. Okay. Overall, I don't like because I see them set up, but I still hesitate. Do you wait for 2 or more candles to get sideways? Well, that's what I was saying back here, Cross. When it comes to seeing a range, you need at least 2 to 3 swings to identify it. So if you recall, when we began to identify the range at 7 o'clock, we drew a line in here, and then we drew a line, I believe, somewhere down down in here. Remember? And then we noticed within the next like 5-10 minutes that the range had shifted up. Notice that the top of this range is now located here. It looks to be about 6-8 inches above where this prior swing line was. Yes? And that the bottom had adjusted up slightly to here from 46 up to more closer to 48, 49. So when you see that, you just simply shift your lines up accordingly. And now you're in that upper range for, 45 minutes. Yeah, but to answer your question, yes, you need at least 2 or 3 points. You got to have 1, 2, 3. You can draw the lines. Now we get slightly higher ones. You get 1, 2, 3. You can adjust the lines. Robert's still trying to learn. Mario says, if I can see the range early, I'll trade it. If I wait too long and stand down, okay, possibly change my. Yeah, I would say just try it. Try it. Give it a shot in sim, of course, in sim. Now, final thing on the range. I'm going to get off of this, okay? If you go in there and you give a hard-earned try at mastering ranges, I mean, you give just a good try. You put your lines on there. You try taking shorts. You try taking longs. You play with the range. You box it in. You put sell orders up here by whatever. You box it in with Object Trader. If you do this over and over and over again in sim and you still can't make any money doing it, then what should you do? If you give this an all-out college try, and you just, for whatever reason, just keep getting hammered in sim and you can't turn around and get profitable, then what should you do with ranges? I'm going to type in some words here. What are they? If you're not profitable and you try it. Starts with a D. What should you do? Continue to try to trade ranges? Just keep doing it over and over again? Running your head into the wall repeatedly? Right. Don't keep doing it. This is so important. Okay, let me just make this clear before I wrap this up. If you continue to trade ranges and they are not profitable, and I'm going to put the word not in caps. Then do not trade them. Does that make sense? I talk to traders. Gary and I talk to traders all the time. I keep getting hammered. I keep trying this thing, and it's just when I get stopped out and I take losses. And what are you trying to do? I was trying to trade this range for like an hour in ES. I couldn't see it. I was trying to think this was going to break out. I had buy orders up here to try to bake out trades, and I got faked, and I stopped out, and it's got hammered in here. And you know what? I've tried to trade ranges over and over for a long period, months, and I just can't get them. Well, then what is the answer to your problem? Do not continue to trade them. That is not a trade type that is for you. We try to show as many trade types as we can in here because we got people all over the world trading all kind of different instruments. So we have to teach this what is available, right? There are people who can trade ranges very successfully and make a lot of money at it. There's other people that can't stand them. You got to determine what you're good at. Now I'm going to shift gears because I got a comment come in that's going to make me shift gears for just to take a sidetrack that's really important. And I'm going to ask a question. And let's move on from this range into another topic that I think is going to be pretty important. How many of you been trading in sim for a long time? Oh, you just can't seem to get out of sim. Show of hands. This is a question. I'm just going to throw this out here real quick. Let's take a quick little side trail that I think how many have been trading in sim for an extended period of time and you just can't seem to get out of it? You're just in this treadmill of the sim world, and no matter what you do, you just can't get out of it. Okay, just for the sake of talking about this issue, maybe I can find a little bigger space. Let me just get this line out of here so I can put a little bit of some text in here, a little bit there. How many is this? I know I can see us showing. I have a lot of hands here. 1, 2, 3. Wow, a lot. Forever. Me, I'm stuck. Back and forth, very long time. Fear of taking losses crippled my mind. All right, so how do we address this? Any ideas? Excuse me. How do you get out? How do you get off that? What's the first step? Any ideas? How do you get off the sim treadmill and get into consistently starting to make some money? What's the first thing you should do tomorrow? A lot of small profits. There you go. All right. So let me. Okay. Any more ideas? How do we get off the sim treadmill? How do we get off the sim treadmill? How do we get live? Even let's say you watched 100 hours of webinars and you tried all manner of different types of trades and you make a little bit of money and then you give it back. You go to sim and you make a little bit of money and you give it back and you go to sim. Rinse, repeat for a long period of time. Steve says trade one lot and have a goal of small profits. Yes. Keep track of my P&L. Yes. Go live? Probably not just yet. Slow the game down? Yes. Track your trade history? Yes. Now, we talked about primarily three different trade types. Uptrends where you get long, downtrends where you get short, sideways price action when you get a sideways situation in a range-bound situation. So if underneath here, I was going to type one thing as the number one first thing to do, what would it be? We're gonna try to fix this tonight. Some of you already typed this in. Switch to Forex and trade micro lots. I've traded I was partner in a huge Forex company in New York and India. If you want to just be a walking zombie and stay up all night long, sure, go ahead, try Forex, give it a shot. You're gonna sit there looking at the euro going sideways for about 5 hours and then fall asleep and miss the whole trading session. Yeah, you don't want to do that. Trust me. Trade with your money. Well, we have one up for that, Kathy. Number one most important thing to your success, aside from clearly knowing your trade setups and your market condition, that's in regards to the trade taking itself. And I've said this 1,000 times, but I'll say it again because it is the most important thing. Instrument selection is key. Critical. It's more than key. Critical. That's why it's number one to your success. So if I said right now, for those of you that are going through this, experiencing this sim situation right now, and I said, what instruments do you trade and how well are you doing on them? Could you type in the numbers? Could you type it all in right now? I trade crude oil, and my success rate is 67, whatever, 68%. I got regularly a 2-to-1 winner over loss, and my average win is 18 ticks. My average loss is 12. 2-to-1 ratio. You would know. You could spit that out, and you could say instantly, well, how you doing on crude? Well, crude, I'm getting creamed. My success rate is like 25-30%. My losses are great. My losses are worse than my winners. I lose 1-2. Some of you might know that. Some of you might know your numbers. We spent a whole webinar going over that. Remember? Anybody remember that? Going over your numbers? Everybody remembers how to do that, yes? You got to know your numbers. You got to know how you're doing on each instrument. I'd venture to say most of you don't. And that's okay, as long as you start doing it. You have to go in and start trading ES. And then you go look and see how you did. You got to trade the Russell. Go in and look and see how you did. You can't have this arbitrary sort of feeling about things. Feelings aren't going to get you anywhere. You got to have hard facts and numbers, and you got to know how you're doing on each one. Now, when you figure out your numbers, I love ES. Most of you know that. If you haven't noticed, I do a lot of calling on ES because that's primarily what I trade. I've learned that I'm pretty good at ES. Right? I have a pretty good sense of what it's going to do because I've seen thousands of patterns on it, so I know how to react. It's kind of like the difference between what's a good analogy? All right, does everybody know how? Our Russell's gotten crazy lately. Russell used to be a go-to instrument for me. If you notice today, I hardly made any Russell calls. I think I took like one Russell trade today. It's too fast. Algos are out of control. Let's take a team. Let's do an analogy. What if you had a football team, just as an example? This could be any team, baseball, it doesn't really matter. And you have a team where, the players have played together for a long period of time, 6, 8, 10, 12 years. They've been together a long time. They know each other's moves. The quarterback knows where that receiver is going to be, right? The front line's protecting the quarterback, et cetera, et cetera. Defense is good. Now, you take that team and you put them against a team that's rebuilding every year. They're churning through linemen. The receivers are coming and going. They turn over the quarterback every couple of years. The coach comes and goes. The coach get a new defensive coordinator. Head coach is fired every 3 years. How do you think those two different teams are going to do against each other? Here, I'll put in a word that I'm thinking of. Isn't that what we're talking about? So when we talk about know your numbers, what we're talking about is how consistent are you on your chosen instrument. Now look, that might be crude oil for some of you. It might be S for others. You might like gold. You might like 6E. You might try a completely different instrument and try the dollar index. The bottom line is you got to find an instrument, any one of them. I like ES, Gary Lewick's crude, and you get really consistent on it. Consistently is what's going to make you the money. Once you get consistent on an instrument, you find your chosen instrument, okay? Number 3, you dabble your toe. And this is important, into that instrument. You see why this is critical? You can't transition it from sim to live until you know that you're consistent on your chosen instrument. If you're still flopping around like a fish when you decide to go live, if you say, well, I tried crude, okay, I tried gold, did pretty good. Russell, I tried, not really consistent. I got on ES, I show some promise, I look pretty good. Now, when you go into that instrument live, what is your goal? I'm giving you a transition plan. That's basically what it is. So when I say dabble the toe, is it to go live and start making a ton of money? What's number 4 here? When you come off of live until it, what is your goal? Okay, let's put in goal is what? What's your initial goal? What are you trying to accomplish? Let's fill in a blank. In your transition, you've gone through all these other steps. You tried lots of different instruments. You started to track your numbers. You got a little more sensible about looking at how you're really doing. You choose an instrument. Let's hypothetically say it's ES. You just start to really get good at ES. Your numbers are up. You're looking good, even though it's still sim. You're starting to get positive momentum. You're like, okay, today I'll try 1 or 2 contracts live. When you dabble your toe into that chosen instrument live, your goal is what? Good. Yeah, I was saying the 49ers there, Chuck. That was a good analogy. I was thinking of the New England Patriots, who've won 4 or 5 Super Bowls in 10 years, and the Niners haven't won any Super Bowls in 15 years. That's about as disparate, different teams as you can get. One that has no consistency at all. How many coaches they've been through, right? And Patriots have been together for 12 years. Every year they win the, whatever. Okay, good. This is all good feedback. So here's the thing. You could trade it. So, question from David. Let me circle back a little bit. His question was, how long do I try each instrument, before I know how well I'm doing? I'd say at least a week. Yeah. I don't think you can tell in one session or one day how well you're really doing on an instrument. You got to go through various volatility cycles. If you want to give yourself a month to go through 3 or 4 instruments and it's in 7 to 10 days each instrument, I think that's very reasonable to start honing in on which one or 2 that you think that you're really good. I think 1 is probably the best to start. Stop losing money. Right. So I'm going to type in something here. There's many things that are part of your goal. Okay, I'm just going to give you sort of the beginning parts of them, because then the other parts come to grow your profits and get more consistent and all those other kinds of things. But unless you do this, to at least break even. Stop losing money. Now, if you get through number 4, number 5 will be what? What will become a result of doing steps 1 through 4? What will happen to your trading psyche, your mind, and your trading mind? What will happen here that some of you, maybe a lot of you, don't have yet? Confidence. That's exactly right. Because here's the thing. Do you think it's realistic to think that you can go from losing money and not having any confidence at all, and not tracking your numbers and not knowing what instrument you're going to trade? Do you think you're going to go from that step of your trading career to going into live on an instrument and start making a ton of money? Is that realistic? To go from that to that? That going to be taking a 6th grader and putting them in pro ball? No, it doesn't work that way. You got to put in some work. There's going to be a lot of steps and some time and work involved here. You're trying to grow your confidence. Because from what I saw from the comments that came in here in the past few minutes, sounds like the confidence level is pretty low. If you're constantly living in fear of getting hammered on every trade, then you have to address these issues. You have to build confidence. That is the key. That is the end goal of all this. Once you have now, I'm not saying, don't misunderstand what I'm saying. I'm not saying, go get cocky and I can do whatever I want. And heck with the market. I'm going to do a ton of money, et cetera, et cetera. It's not going to work like that. Okay, you're still got to be humble here. You know as well as I do, the market can flip and hammer you at any given point. Yes. I would venture to say that if you gave this first step, like I said, at least 1 to 2 1 to 2 weeks on each instrument, and but however, you could cut that short. Let's use an example. Let's say that you try to trade gold, just hypothetically. Okay, you want to start with gold, whatever reason, and you go, and like the first day you get hammered. Okay, and then in the second day you do okay, but at the end you lose more money. And the third day you go in and you almost break even, and then you take a loser and it wipes everything out. Now, is that an instrument you should probably continue to explore? Gold? If that happened to you in your exploration process here, probably want to dump that. And gold is tough to trade, yes. I wouldn't suggest starting with gold. Probably should look at starting with ES. If I was to suggest anybody in here that's going through this, I would put this in. I'll do 1A and 1B. Just make it real simple for you. Start with ES. It's the most consistent instrument that we trade. It's that simple. Okay, if you want to narrow it down, just start with ES. Start to build some consistency up. Teach yourself to learn this instrument like the back of your hand. You can make a ton of money, I'm telling you. You can leverage up on this thing, put multiple contracts on here. Okay, so what am I talking about? Let's get over here. All right, let's start putting some money into the equation. Let's look at one trade, and then we're going to get ready to wrap. Let's say you didn't trade all day. Okay? You missed everything. Everything. You saw the sideways, you saw the ups, you saw the downs, you just whatever, you were tired, you slept all day, you went to the park, you had a picnic, I don't know, whatever you did. Doesn't matter. Now you go in there and it's coming into the close, and you've got about 15, 20 minutes. You're in the last half hour of trading. Can anybody on here, just show of hands, yes or no, see a long trade? One or two or more long trades on this chart, starting from here. You can just say yes. You can say I see whatever, one. I see one at, I don't know, I'm going to throw out a time, it's, 12:32. I see one at 26:74. Where are there long trades into the close on ES today? Yes or no? That's all you got to say. You can tell you say where they're at. Yeah, okay, so you were in a range. Let's all look at this together. Yeah, okay, I see some swing levels coming in. I see some diagnosis. Most of you see 3. Now here you were kind of sideways to down. Okay? Here you were sideways to down. And then you get a little thrust up. Like such. Background turns green. And our first long entry could have been, conceivably, right here. We close below line 6. Check mark 1. Below stealth. Check mark 2. Is this a legitimate long trade? Yes. Trade number 2 was here. Trade number 3 was right here. Everybody sees those, right? Most of you typed in 3 trades. In fact, quite a few typed in exactly where they were. Perfect. Brian, who did that? Excuse me. Let me get a sip of tea. Hold on. Oh, sorry about that. A little tickle in my throat there. Okay, perfect. So you're seeing the trades. Yes, you're seeing the trades. Okay, so let's do some numbers together. How much is this trade worth if you got filled here and you stop out of it here? Yes, there are other ones, Brian, Steve. Yes. Yeah, there's other ones. I mean, arguably this is a scalp. This is a scalp. Minimum criteria. Is there more? Yep, there's a scalp over here. So there were more than 3, but I'd say at least 3 good ones. There are more, though. You're correct. Right in here. All right, and you stop out here. So this trade went from, you got long at, let's use some round numbers real quick here. So you got long at 72-ish, 72 and a quarter, and you got out at 81 and a quarter. That's 9 handles or 9 points. That handles are points, right? 9 times 450 or 9 times 50 is how much? $450 a contract. So if you put a 2 lot, if you put 2 contracts on that trade, how much did you make? $900 on a 2 lot. Okay. All right, that looks pretty good. All right, you missed that. You missed that one. You were still playing with your dog and having a sandwich and some Coke and some chips. But you notice this one, and you get in at 2681-ish. And you ride that one all the way up here to 9250. That's 11 handles or 11 points. Yes? How much is that per contract? 11 times what? How much is a point? How much is one handle on ES? 11 times 50 is what? 550. Or 2 lot would be $1,100. That one trade right there. And this, as you recall, was 9 handles, or 450 and 300. 1 lot, 2 lot, respectively. Yes? All right. Now, you missed both of those, and you got about 5, 10 minutes, 15 minutes to the left of the close, and you catch the last trade. And you get in here, I don't know, close of this bar somewhere, 92-ish, and you get out before the close here at right at 96. So that's, I don't know, 4. How much is that? 4 handles or 4 points is 200 and 400, respectively, on 1 and 2 lot. Yes? Now, individually, each one of these trades is pretty darn good. Yes? Mainly because you didn't feel almost any heat at all. In fact, you felt no heat. Each one made money. You could have taken 1 or 2 or all of them between here at 1226, arguably 1223, the last 30 minutes. On 1 lot, you could have made 450, 550, and 200, which is $1,200 on 1 lot on 3 trades. $1,200, 1 lot on 3 trades. You can do it, David. Why can't I do it? Of course you. Every single person in here can do this. I mean, do you think we're just showing this for the fun of it? This is real money. This is real. You want to make real money? You can make real money. We're showing you how to do it. On a 2 lot, $900, $2,000, $2,400 on 2 lot. Well, you could be if you took a scalp. I mean, there's different ways to look at it. You could have put a 1 lot on with a runner. You could have put a 1 lot on with an 8-tick scalp and let another do a runner. There's variations on this. I'm just kind of, in less commissions. Of course, there's commissions in here. There's some slippage. Maybe the fills weren't exactly where I'm showing. I'm just showing round numbers of what approximately these trades are worth. Okay, I'm just showing roughly what they're worth. So some of you might have got a little better fill and put more contracts on. Some of you maybe didn't, you just did 1. I'm just showing approximately how much these 3 trades at the end of the market today on ES were worth. Okay, Mario. Uh-oh, I just realized I'm over trading. I'd venture to say that's probably true of a lot of people, Steve. And unfortunately, it takes a lot to figure that out. Just because we show a trade on a chart, and just because a trade is called in the live room, especially if it's on an instrument you're not even tracking, you don't have to take every single call. I mean, if you go back this morning and look at between the open and 8 o'clock, there's probably, on ES alone, I don't know, 10, 12, 15 trade setups. And you know what? You could have only taken maybe 1 or 2 or 3 of them and still made $1,000 easily. Yeah, so this is what I'm talking about. You got to get consistent. You got to find an instrument you really like. You got to get familiar with it. You know, try NASDAQ, try YM, start with the ES, look at trade setups, toggle back and forth. I've shown this a million times. Okay, here you're short, you're playing with your head. Here we turn red, we get a thrust down, we get a pullback. Was that a trade? Yes. Was that a trade there, kissing the midband? Yes. Do it again, over and over again. It's rote drill. Look at the long trades. You come up, is that a pullback? Yes. Is it holding the midband? Yes. Am I getting long? Yes. Right? Pattern recognition over and over and over again. Do it in the live room. Do it after the room. Do it on live data. Do it on replay data. Toggle it back and forth 100 times. You do that, trust me, you're going to see the trades almost instantaneously. You'll just see them. I'm going to start dating ES. Well, good for you. Yeah, Mario wants to transition from sim to live, and he's going to try to take advantage of this little plan we put together here as a team, and that's really all you got to do. I know it sounds simple. Pick the trade types you like. If you don't like minimum retracement trades, if you don't like deep retracement trades, phantom trades, you know, whatever speaks to you. That's the whole. Oh, and I should put that in here. You got to know your trade types. I forgot that. That's a good point. I forget who said that. That's absolutely one of the other things in here. I'll put that under consistency. Consistency we'll add another term to that one. Consistency, which equals know your trade types. That's kind of obvious, but we'll just put it in here. So what do I say by know your trade types? Does that mean take everything that comes along whenever you see it? Is that what that means? Know your trade types? Does that mean you're going to get quizzed later? We're going to give you like some kind of test and give you a grade on it? No, I should probably rephrase that because it's confusing. Let's make it understandable for everybody. That's not the right way to put that. Let me fix that, and then we'll wrap. Here, it should be this. Know what trade types you are good at, right? That is the key. Because what we're saying is it's one thing to know the trade types. Like when we do the quizzes in here, when they go back and forth and we'll go up and down, sideways. Okay, is that a short? Is that a long? Is this a trade type? Yes or no? 5 seconds, whatever. So it's one thing to be able to see a trade type and clearly identify what it is. Okay, that's a skill set we all need to develop. I see that's a mid-band trade, right? I see that's a minimum trade. I see them in a range. I need to trade a range, et cetera, et cetera, et cetera. However, that does not mean that you're going to be good at all of them, right? You need to know which ones you are good at. Now, if you study yourself for a week or two or more and you come back and you say, I've learned through experimentation on various instruments that I am a fill in the blank, mid-band trader, right? I know in a trend, I can see minimum criteria trades and mid-band trades, and I'm going to take those only when I see them in a trend. I tried trading ranges. I tried it 10 times to Sunday. I lose every time. I have no confidence with ranges. When I see a range, I know I need to fill in the blank, stand down. These are all important but subtle changes that you have to make over time. If you want to really, are you serious about going from sim trading and you've been stuck in that rut for a very long time, you've got to follow these 5 steps right here. Some of you, it's going to go quickly. Others, it's going to take longer. But I can guarantee you this. Almost every trader I've known of all these years has more or less followed these steps. And if you do it, you can make that transition where you're not trading sim anymore. Now, in regards to trading your own money, this is really important. I would suggest every single person in here, when you're ready to start transitioning from sim to live, you go get a 1UP trader account. Go get a 1UP trader. I don't know why everybody in here doesn't have one. I mean, what is better than somebody saying, look, if you prove you can make this much money, I will give you $50,000 and you keep 80% of the profits. What that will do psychologically, if you're trading scared money, which some of you might be trading scared money, that means that you cobbled together $5 or $10 or $3,000. You threw it in an account. You're scared to death to trade it because you're going to blow it all up, right? If you don't want to do that anymore, 1UP will alleviate that problem. Are you a lightning aficionado? Which do you prefer? Okay, here's the thing. I'm going way over here. I'm gonna stop this recorder.